All right, hello, welcome back to day 25, daily investing analysis. We're going to start off, once again, like yesterday, on the trading view charts. We're going to look at Bitcoin hovering around its same usual price, coming down a little bit. As we talked about yesterday, this kind of coincides with the whole theory that perhaps we will grind downwards after having our flash nuke and return back up to where we once were. Flash nuke goes down until some kind of TGA event, DXY crash or something, and we get one of our macroeconomic drivers spinning into our favor. Every other coin hovering around the same low range, kind of grinding downwards. Ethereum's fighting back, but that's really about it. Yeah, nothing's looking too good. Not at all. We're going to take a look at the move. We see the move is generally trending down, which is good. It's still in this downtrend, but it is kind of in the short term trying to fight back up. Very interested to see what happens here if we continue to go down or we come back up. The DXY fought back for a little bit for a few days, but it's back down to 107. So we can see it started coming down. Had a quick peak amid Trump tariffs, but turns out he never had to use them, so now it's back down. Assuming that Trump keeps the same diplomacy I talked about or hinted at yesterday, Trump will never actually have to use tariffs, but instead he will end up doing something like using them to threaten countries into cutting him a better deal or cutting the country a better deal. It's like big stick diplomacy from Teddy Roosevelt, except it's Trump diplomacy where you don't actually use the big stick. You kind of just wave it around and threaten people with it. So that we'll look to see what happens. Crypto total cap exactly like Bitcoin. Interesting to see the others total cap. Let's see. Let me get this off. Yeah, others looks about the same, a more extreme version of total. The FedNet liquidity hasn't moved much. Not much data on there. The Fiji Solutions dashboard won't load anything either, so it's a little bit unfortunate. Global liquidity still short term and long term trending downwards. Waiting to see a strong reversion in that if that will come. Anything else of note on TradingView? No. Ratio analysis, that's for the server, the page server, and yep, the liquidation map's loaded today. And I've actually, upon some further research, I found that actually 3-day or shorter time frames is actually more accurate than something like 1 week or 2 week or even 1 month, because these actually keep up more up to date with current and changing, longs and shorts and where their liquidation prices, because people do change frequently. With month and 1 week, they take longer to update and they're not exactly accurate. So we do see that there's quite a bit of heat down here leading down to 93, and that could cascade down to 90. But also still tons of heat up here above 100K. But price could go in either direction. It could grind in either direction. I still have a downward bias towards the short term, but we shall see. Velo.xyz it's actually a resource that I find a little bit underrated that no one really uses. It's like TradingView, except a lot less community based, where you can make your own indicators, but they have a lot of good, interesting indicators here. I like to look at the aggregated funding here and the choppiness index, if I can find that. Yeah, right there. But yeah, we can see that the aggregated funding last few days has dropped down significantly. But compared to the last week or so, this is really just noise. What we're looking for is major trends and changes in the aggregated funding, like right here, for example. Or like how it was when price first went to 100K, which would be right here. But we're also watching this to see if price starts to enter a long-term trend upwards while funding stays, at max at a level here, below at around 0.025. Don't want it quite to be at 0.1. That's overbought. We saw what happened when that happened. Got overbought. We want rallies like this, but as it gets along to like here, we want to see funding start to rise and rise and rise, and the rally continues to rise. Because you can see here, this rally right here was actually sustained by low funding, which this was actually a sign to us that perhaps we're actually entering a bull market phase. But then a good bit of on-chain indicators were indicating actually we're going to come down or go into mean reverting. So a little bit unfortunate there, but nothing is trending. Let's actually take a look at the choppiness index, because why not? Choppiness, okay, yeah. So what does this imply to us? I think I need to go on the 1 week. I don't need to be on the 1 hour. Okay. Yeah, so whenever we have choppiness index on the decrease, we have it coinciding with an uptrend. We have it really high and stabling at high points. We also have mean reverting regimes. When it's trending upwards, we have a good trend. And it seems that it was trending upwards. We let's see, where does this coincide at? Right here. So yeah, it comes down, beginning of the trend, and then it goes up right here, and that's this trend right here. And then we enter mean reverting, and it seems that we have been starting to plane out. Interesting how this choppiness index is reporting on this. Let's look at some previous historical events here. Yeah, so we got the downturn here, which goes into this trend. The upturn, this right here is a little bit interesting. Okay. And it comes up with the funding going up. So yeah, a clear uptrend in funding or a clear downtrend in funding indicates a trend of any kind, whether up or down. Not certain which one it'll be next, but if we believe in our fundamental macro bias, then it should be a long-term uptrend for us. And I'll show some posts on Twitter as to why I believe that. Okay, and the choppiness index on check on chain, interesting one here too. We actually have, throughout all price history, we're sitting on actually the highest point ever recorded on the choppiness index. And what I've noticed is the same kind of thing. It's literally chopping around or hovering at a high or low level, and we have a mean reverting state in price. When it comes down, we have a trending situation, and also when it comes up. But when it's coming up, we're kind of losing our trend, right, into a mean reverting state, which we are in now. What we could see is an extended chop zone here, right, going into about March or maybe even April, and then it starts to come down. We could stay mean reverting for a while, or perhaps we're seeing a flash dump in price because, let me find a couple examples. Let's see. Yeah, so this right here, so we hit this peak, right, and we come down. So the mean reverting right here kind of ends, doesn't last very long, lasts like a month, and then we come down, we have a trend, we mean revert for like another month, and then we have another trend again. Mean revert very slow, literally for another month, but then we go into a trend. This mean reversion state is actually kind of a false state. This isn't even mean reversion, although it kind of is. It's like a pause in the trend, and then we go back up again, and you can kind of see, but just by looking at this, pausing and looking at it, you can tell. Now, it looks like there has been no data updates, but if we look closer, there has been a slight decrease here. Although it's very marginal, not very important, from a 73.37 to 73.31 choppiness index value. So there's hope, right? There's hope that we're getting out of the mean reverting state. All right, so back to the Twitter posts, because there's quite frankly nothing else to do, and we're going through this as quick as we can. Pentoshi had a post that wants me to remind you guys of how important crypto is to our lawmakers and our politicians and to the rest of the world in finance. So you basically have a standard deviation curve here. Let me put this on the main screen here. Standard deviation curve of the population. We'll just say it's of the population. And of the 0.1% over here, crypto Twitter. And then you have the Jeters, the meme coin apers, and then the hodlers / systemized traders / actual professionals, and that mini standard deviation curve of the crypto Twitter population. And you can see Pentoshi says up here, there's never been a chart that has represented us all so well, because it just shows the microcosm, the micro bubble that us involved in crypto are in, and how unpopular, not necessarily because everyone hates it, but just simply from the lack of actual traffic and amount of people in crypto, how unpopular crypto is right now, and it's not trending right now, and we're still holding at incredibly high prices, which is a bullish sign to see considering what we have on the horizon. Bitcoin Data 21 made a good post. He said that the dollar has likely peaked, allowing risk assets to run. Look at the similarity in the 1 week RSI peaking around 70, followed by Bitcoin and altcoins running for about a year in the last 2 cycles. Then there is positive, and of course the last 2 cycles are the only ones. This is really where the global economy and macroeconomic factors started to affect Bitcoin, which is why this is actually, although it's a low sample size of data, a very low sample size, it's sufficient enough, and it's a good enough, and it's also sufficient enough to make a bullish case for us. Let's see, yeah, and then there is a positive divergence on the DXY RSI at the top. You can see in the yellow lines, which is bad for risk assets. But if we look here, we can see the trend. So we can see that the DXY on top peaks out, and so does its RSI. It peaks out on its first standard deviation band, and it starts trending downwards. And we actually see that this coincides with the slow uptrend in 2017. And then as the RSI starts ranging back upwards, right, in this yellow line, we get to the turbo pump in 2017. This is all altcoins, by the way. We come to Bitcoin, we see the exact same thing, and it plays out over time. 2020, quite similar. We see it peak out at about the one standard deviation line, the DXY. And yeah, so same thing. Slowly uptrend and takes off. Slowly uptrends and takes off. Slowly uptrends on the way down. Slowly and takes off whenever DXY starts ranging back up. But when it really starts getting up to this range here, that's whenever our assets start to fall off. And we can see now, in the current time, we're in a situation. Of course, I believe this is the logarithmic chart for not just Bitcoin, but for others. So although it looks like we're not doing well, right? It looks like from here we're just going down, like the inverse of the trend. I want to remind you, especially with how Bitcoin looks, with how logarithmic it is, this is more like a level and has not moved yet. And I think we can expect it to do something like this and to barely look like it moved over the next year. But in reality, if you took it off of logarithmic scale, it'd be something like this. And with others, I think altcoins, it's just a personal bias I have from all the research I've done. And also my money is there because of the research. So, there's that implicit bias I'm trying to avoid. But it's altcoins have a lot of potential to run. There's so many altcoins out there, which is interesting to me because you would think, maybe altcoins aren't going to see as many crazy gains as last run. Not because there's less money this time. Not at all. It would actually be because most of the money, since there's say there was 10 altcoins in 2021, and now you have 100 and all, or 1,000, and all 10 of these did 100x. Well, now you've got to divvy that 100x up this time, and roughly that, to these 1,000 altcoins. Which, this is not the exact math how it works, but I'm pretty sure you can figure with common sense, using your mind, using your brain, that, there's not enough money, new money, coming into the market into altcoins for that. But then again, I could be wrong. With how much money that whales, and with pretty much any smart trader that's ahead of the curve or anybody is making off of the majors, thanks to the supply shocks that are soon to happen from institutions buying majors tokens, majors coins. Perhaps everyone makes giga profits, and actually every single altcoin sees crazy run-ups, but a lot of coins will rug or whatever because the devs get too greedy or something, or maybe some crypto legislation in the US gets passed protecting ruggers, and then something like, never, that could be a black swan event. So just keep your eye on that. But we do see that perhaps the DXY is trending downwards. We would love to see it go below 100. And actually, I'll skip Marty Party, go to Thomas now that we're on it. And basically, Thomas is making a point that M2 money supply is going down in terms for the US and all of the countries here. And we could see, it's not going down, but it has been going down in recent, and then, we've had since about 2024, it's been trending upwards. And is it about to explode is what he's asking. Like it has in previous years in 2017 and 2020. And he makes a point for the dollar-denominated global M2. And you can see when that rises, we also get a rise in crypto. And when it drops down, we get a drop in crypto. And same with S&P to a degree. So what exactly was he saying here? It's very complicated. It's a very complicated post, but I'll give you the best summary that you could probably need here. Of course, you can go read the post yourself. But he's wondering, basically, can we get another zone like this in 2025 where we have dollar-denominated global M2 come up a lot, and then we see our S&P perhaps come up a little bit, and our Bitcoin also go up greatly. Some kind of chart like that. He believes yes. However, it wouldn't be from a surge in... He thinks it hinges on the DXY. He believes the DXY has topped out, just like, who was it? Bitcoin Data 21 does. But he also makes a point. It's very critical to understand liquidity, saying if the dollar is strengthening rapidly against other currencies, that's the DXY. That's how the DXY is measured. Servicing debt and conducting trade saps more and more liquidity globally, consequently leaving less liquidity available to put work in asset markets. Let's go over that one again. So if the dollar is strengthening rapidly against other currencies, servicing debt and conducting trade saps more and more liquidity globally, consequently leaving less liquidity available to put to work in asset markets. So what does this mean, right? Well, it's in the sentence there. He's basically saying that when the dollar is strong and it's outperforming all other currencies, debt servicing and trade and all that kind of stuff globally, it's denominated in the dollar. And it takes more liquidity from people to denominate in the dollars and to use the dollars, and it leaves a lot less to get thrown into asset markets, to get put out of bonds for companies to use for rates to come down, all this kind of stuff. It all ties in. This is why we hinge on a weakening DXY in order to see our Bitcoin go nuclear. Because the more money there is in the free markets, the more money that we will get to risk asset markets, and that'll be a huge buy sign for everybody. It'll be bullish. Whales coming in, buying, supply shock gets hit, but we're waiting for the DXY. We're watching the DXY closely. We want to see this come down. Can't state this enough. We need to see this trend continue, into the coming months. I'd prefer something a lot faster, which we might actually see. We might see something like this, which would be huge, of course. But it has to come a long and hard way. Can it? If it came up this fast, who's to say it can't go down that fast? That's the most degenerate, boneheaded analysis I've ever done, but, it's Twitter, so. Marty Party made a good point, telling us how all the different disasters and global disasters were all lies to us to just get money printing and money laundering and the Fed to fund shit, and how Doge and Elon and Trump is going to fix it. Going to make it better, and actually we may not even have to see M2 money supply go up for the bull run. We may even see it come down or stay stable. We may even see the dollar strengthen. Fed fund rate goes down, inflation hovers or goes down, but everyone has more money. We continue to enter reflation and Goldilocks like in 42 macro, which same signals today as it was yesterday, by the way. But we have, great signs, reflation, Goldilocks, and everybody, and your mom and your grandma has extra money to throw around, and people are going to start throwing in little amounts of money into Bitcoin, stock market, everything can go up. This could be a parallel that we see, or we will see what we've been calling for, which is more likely, but this is inevitable. What I just described is inevitable. We shall see. All right, Byzantine General for the last post. He has 2 posts here. Then we'll wrap it up and call it a day. So he made one post here, which is very interesting. Sounds like it might actually be happening, and we see that the Bitcoin Reserve Act in Arizona takes the lead. Arizona Senate Bill 1025 passed both Democrat and Republican caucus votes and now moves to general floor vote. Love to see it. It's getting closer. And the other one, of course, we see that BlackRock to list Bitcoin exchange traded product in Europe. Usually bullish, but Byzantine General makes a good point. Do Europeans have money? I mean, it's still good, I guess. There are a bunch of... The Rothschilds could buy in now. Easier, as if they weren't already. But, yeah. Hey, this is a good point. Europeans... You guys need some U.S. and Jesus. Actually, no. You don't need any more U.S. help. You need Jesus. You need to figure your shit out and stop letting migrants in and take over all your jobs. You know what? We don't need to get political here. I think the point stands. It's a good joke. All right. That's enough for today. Always do your own research, and I'll see you tomorrow.